Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 15th through July 19th, where we'll see if we're going to get Christmas in July in 2024, and we'll discuss ways that we can make money trading whether or not we get Christmas in July in 2024. So thank you again for joining us for part one of our weekly trading game plan for July 15th through July 19th, and let's get started. Welcome, Fairchild. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. Here's our Google document with our weekly trading game plan notes for part one for the trading week of July 15th through July 19th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trade ideas, trade strategies for the trading week, and you can find a direct link to this Google document in the description box below. We store all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as notes from previous weekly trading game plans. And again, you can also find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome, Gerald Fitz, Ricky Kahn. Glad to see you all in the chat today. Hope you all are doing well. So firstly, we'll look at how the markets ended up on Friday in the main page in FinViz. So we'll see they were running up during the day, and then last power hour or so, gave a little bit of the gains back, but they were up over 1% earlier in the day. So Dow ended up 0.62, NASDAQ up 0.63, S&P up 0.55, and again, the trend for the day was definitely up. We had many more advancers than decliners, 75% advancing, 20% declining. 94% new highs, only 5% new lows. We've now got 70% above their 50-day moving average, 30% below, and almost 70% above their 200-day moving average, only 30% below. So all very bullish activity towards the end of the week, and we'll see. We'll talk about the economic data that spurred part of this rally. Mag 6 or Mag 7 were somewhat mixed on Friday, and we saw some sector rotation in and out of the Mag 7. We'll also talk about the rotation in and out of the Russells, small caps, biotech, etc., and again, what caused some of that rotation. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. Some of the news, they talk about some themes, Tesla valuation, turning heads, long-awaited great rotation seems to overcome the nagging worry. Again, we'll talk about this rotation we saw out of the Mag 7 into small caps into the Russell briefly. Dow closed above 40,000, Citi, Wells, and JP Morgan fall. And we'll talk about some of the earnings coming up. Dow rises more than 200 points, new record above 40,000. So again, we've had all the indices making new record highs again. Look at some of the futures. Oils oscillating between 80 and 85. Touched 85, came back down. Got support around 80. Natural gas been kind of stuck right around the low twos. Came down from higher twos. We saw a surge in gold up above 2,400 again. It's got support around 2,400. Did retreat a little bit on Friday, and we'll see again that volatility. And we'll talk about some ETFs, some ways that you can take advantage of some of the volatility we've seen in gold and silver. Futures on the indices are all pointing up right now. So even though Russell's up, pointing up 1%. We did see a recovery in the yen, whether that is the weakness in DXY. The DXY futures are showing 103. I think the actual DXY is around 104. Whether that's just weakness in the DXY or intervention by the Bank of Japan. There's some rumors to that effect. Bitcoin back up around 5,800. and we saw Treasury yields all decrease quite a bit. Again, we'll look at the economic data, CPI and PPI data, causing more speculation for cuts. So again, bond yields drop, prices pop back up. Again, we're back down below 4.5, 4.1 on the 5-year. So welcome, Ellen Krantz. Thank you for joining us. Hope you're doing well. So if we look at the major indices, and just a quick reminder, you can find these direct links to these screeners for the major indices and the technology components in our notes documents, and also in the screener sheet in our ETFs and watchlist Google Sheets. So if we look at each of the indices, see the Dow's broke out of that multiple tops at a new record high. Moving average moving up. So we'll see if that holds, if that becomes a support, or if it retraces back down there. See this big gap up in the IWM. Again, we'll see we got cooler than expected CPI data caused this speculation that inflation's coming down, that the Fed's going to cut. So your interest rate sensitive sectors, the Russell, the small caps, got a big gap up, and that continued on Friday. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But just in my humble opinion, I think that was an overly exuberant reaction to the slightly lighter than expected CPI data that we're going to see. And I would not be at all surprised to see the Russell give a lot of that gap up back at some point. The timings, I'm not sure, but again, I would not be surprised if the Russell gave back a lot of that gap up. SPY, pretty steady, middle of its channel, making new all-time highs. Qs, NASDAQ retraced a little bit. Again, we saw some rotation out of the Mag 7. So again, the weighting of the Mag 7 in the NASDAQ and also in the SPY held those back a little bit, but we can see it's continually testing that upper trend line resistance, making new all-time highs. Got good support by that lower trend line support as well. So I would expect that to continue and to narrow. We looked at a breakdown of the technology components. Welcome LinkedIn, Walter Lyons. Good to see you all in the chat today. Hope you all are doing well. So again, we see that slight correction in the FANGs, so the Magnificent Seven. Again, when we saw that rotation into the Russell, it looked like they were taking profits out of the Mag 7, rotating into the Russell, into small caps, also into biotech. So again, your interest rate sensitive sectors got a pop off of that lighter than expected CPI data. See a little bit of a correction in the biotechs. ARC, again, got a little bit of a pop, hit its upper trend line, got rejected, so not really participating as strongly. Semiconductors, again, probably some profit taking, so they retraced a little bit back under their upper trend line. Got a good support, lower trend line, again, like the overall NASDAQ. Again, the TQQQ leveraged on the NASDAQ. Did correct somewhat again with the Mag 7, heavily weighted to the Mag 7. And similarly, but not quite so heavily weighted to the Mag 7, the broad technology retraced a little bit below that upper trend line. So again, not as big a reaction as the FANGs. Again, this is the rotation in and out of the Mag 7. Welcome, Douglas PC. Glad to see you. Hope you're doing well. Okay, if we look at a breakdown of the groups and industries, also in FinBiz, We go to the groups, look at the sectors, the industries from Friday. We see again some recovery in technology. Mag 7 had some recovery. See a rotation back into basic materials. We'll see that surge in gold and silver. Real estate, again, interest rate sensitive, so it's had a nice short run. Again, we see for the week, real estate was the most positive. Utilities also benefits from cuts in interest rates, so that had a good week. See the weakest, communication services and energy, and oil retreated a little bit. So healthcare rebounded somewhat this week. Weakest are defenses, energy, and communication services for the month. Again, it was led by the Mag 7. Again, recovery in real estate, financials, basic materials recovering somewhat, and the weakest defensive and energy. We look at a breakdown of the industries. See solar, again, very interest rate sensitive, so it reacted positively to that speculation of sooner, more cuts. Again, real estate, basic materials, coal, silver, gold, REITs, again. Gold, again, had a big run and then a slight retracement on Friday. Copper, again, the weakest. Again, uranium's been oscillating. It did rebound, gave a slight correction on Friday. Again, solar reacted very positively to that speculation of interest rate cuts. Again, I think that's overdone, but we see high volatility in solar. Again, uranium positive, very positive for the week, just a slight retracement on Friday. REITs positive. Gold and silver, again, saw strong resurgence. Gold back over 2,400. We'll see silver tested 32 and retraced a little bit. Steel recovering a little bit. Aluminum was negative. Airlines, we'll talk about the effect of airlines relative to Christmas in July 2024. And gold, very positive for the month. REITs. Silver, very positive. Steel, etc. REITs, again, real estate recovering. Again, airlines negative. See solar negative for the month, but again, very positive reaction to that interest rate speculation. Okay, let me grab a quick drink and we'll go over the economic news that we got this week, and we'll talk about the economic news coming up for the subsequent week. I'll go over some of my highlights, and then again, we can look at the whole economic calendar from last week and the upcoming week. Just a quick reminder, as the important economic results come out, any important economic news, etc., comes out, I try to capture that and post it in the Surf the Markets channel in our Discord. Our Discord is free to join. We'd love to have you and encourage you to join and participate in our free Discord. We have plenty of channels to talk about different types of trading, different trading styles, trading different asset classes, and again, a great source for real-time and other economic news. For example, in the Surf the Markets channel in our Discord. So again, as that important news comes out, I'll try to capture a screenshot from investing.com. the raw data, etc. Also, as inventories, etc., come out in FinBiz, we'll post that, and also any important economic news. So again, we'd love to have you and encourage you to join our free Discord. Great source for real-time economic news and a great community where you can share trading ideas, help each other make money trading, help you succeed in your trading career. So I've got some notes from the Powell testimonies on Tuesday and Wednesday. Quickly review some of the highlights of that. Again, Tuesday he testified before the Senate Banking Committee. Just some of the highlights. He said inflation's not likely the only risk we face. So again, he's concerned about full employment, weakening economy. So they are looking more balanced at both of those risks. They said more good data would boost confidence on inflation. Again, they reiterated they need more data, more confidence, etc. They're not ready to make a move anytime soon. He says the labor market is strong but not overheated, so that's positive. Don't have to worry about employment as much. Easing too little or late could duly weaken the economy. So again, they're concerned about easing, when they're going to start easing. Again, they're trying to gain more confidence before they make any cuts. Labor market appears to be fully back in balance. So again, that's positive in terms of the overall labor market. Rate increase doesn't seem likely as the next move. So again, just ruling out that they're not likely to raise rates any. And again, they're reiterating they're not going to cut anytime soon until they gain more confidence. So again, higher for longer. And again, I think the speculation reaction to some of the CPI data that we saw was a little bit over the top in terms of rate cuts. So on Wednesday, he testified before the House Financial Services Committee, pretty much the same. But a couple things, as he says, the Fed policy is restrictive. The neutral interest rate likely moved up. And also it feels like the policy is restrictive, but not intensely restrictive. So again, it's not saying he feels an urgency to cut, but it is restrictive. They're using that tool to bring inflation down. And again, they want to see inflation at least headed down to 2%. He did say, they're not going to wait till it hits 2% as long as they see that it's reliably headed down to 2%. So I hope that all helps. And Thursday, again, we got CPI data and also jobless claims data. Again, the CPI data came in slightly lighter than expected, and we saw that very positive reaction into, they speculated we're going to get cuts sooner because inflation's coming down. So the Russell, biotech, solar, utilities all had a big pop. Then we saw a rotation, profit taking out of the Mag 7, rotation into the Russell, into small caps, the interest rate sensitive sectors. So again, Thursday, that was caused, by the lighter than expected CPI data. Jobless claims, lighter than expected. But again, I think the market was just reacting mostly to this slightly lighter than expected CPI data. You can see it's only 0.1 versus 0.2, 3.3 year on year versus 3.4 month on month. Again, this is negative. That's core. But the fact of the month on month was negative. Again, market reacted very positively to that. Again, lighter than expected initial jobless claim says, the job market's still strong, relatively strong. Continuing claims lighter than expected. So, people are still finding jobs. So again, as Powell mentioned, they're not too worried about the job market, focused on continuing to bring inflation down. And that was a positive reading. Real earnings slightly less than previous. Then Friday, we got PPI data. Core PPI was higher than expected, year on year higher than expected. So months core 0.4 versus 0.2 actually went up. So this is front end of the supply chain. supplier inflation. But the market didn't react terribly negatively to that, even though this is, front end of the inflation curve data. Again, pretty mixed. I think they were more focused on the CPI data. Now, the part of the reason may be that some of this inflation on the front end of the supply chain, was not necessarily translated into consumer inflation. Essentially the companies could eat that additional cost, even though the cost of their inputs is going up. They could eat those costs and not pass those on. So it is possible that may not translate into higher consumer inflation. So possibly that's why the market didn't react as much to the higher than expected PPI. We also got Michigan consumer sentiment. 1 year inflation, as expected, still below 3%. So again, that's positive. 5 years now below 3%. So again, that's positive. So consumers' inflation outlook is positive, trending positively, but their feelings about the economy, current conditions, etc., degraded somewhat. So the consumers, not as happy, a little more concerned. Sentiment's more negative. So again, we'll talk about how that potentially feeds into whether we're going to have a Christmas in July of 2024 or not. So we'll look at the rest of the economic data from last week, see what's coming up for this week. Got some bond auctions, not too bad. Tuesday, again, we've got, various Fed officials talking. Again, when are they going to cut? How fast are they going to cut? Mortgage rates at 7% should come down a little more with the 10-year coming down. Wholesale inventories flat. Gasoline inventories down a bit. Talked about jobless claims and CPI. Natural gas storage up more than expected. Again, we saw a decrease in natural gas prices. Fed balance sheet slowly coming down. Talked about PPI and Michigan sentiment. Rig count down a little bit. Total rig count down slightly. So again, holding oil prices up, over 80. Look at the economic calendar for next week. Welcome Born to Be Free. Thank you for joining us. Hope you're doing well. Hope you had a great trading week. So not much Monday. Again, more Fed officials talking. Get retail sales. So again, this is for June. So it won't really tell us if we're going to get Christmas in July. But again, we'll see if retail degraded in June. Retail sales data on Tuesday. Some housing data. More Fed officials. Wednesday we got mortgage data, housing, more housing data. Some production, industrial production. Natural gas inventory. Thursday we get weekly jobless claim data. Philly Fed. So not a whole lot of major economic data this coming week. We are just starting into the next earnings season. We had several of the big banks, J.P. Morgan, Wells Fargo, announce, and their earnings were generally positive. There were some concerns going forward. So as we saw, J.P. Morgan, Wells Fargo didn't really hold their initial gains. Got more financials, BlackRock, Goldman Sachs on Monday. Again, we're just getting started into the next earnings season, so I'd highly recommend you go through the list of earnings reports and see how that would affect any stock that you're interested in trading, what you're holding at Morgan Stanley on Tuesday, Schwab. So again, all the financials kind of lead the earnings season. Again, highly recommend you look through the list and see how that may affect your trading. Again, we hear that it's not just how the earnings that they report, but also their guidance going forward. And again, we'll talk about how some of that guidance has negatively impacted some of the stocks. And again, you can hear how we trade, how we make money trading when earnings matter. And again, earnings definitely matter. Additionally, their guidance going forward, I think, is even going to be more important at this point since everything is flying so high. Again, just some other reminders. Friday is July options expiration, and the next FOMC meeting is July 30-31. We don't get a SEP, we don't get a dot plot this time, so we're still sitting on the last dot plot that I believe the average was just one cut this year. Okay, let me grab a quick drink and we'll go look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, Webull's offering a number of offers and promotions. If you open and fund an account with Webull, they're offering a 2% cash bonus for transfers of investment to Webull. You can get up to 75 free fractional shares of stock by opening and funding your account with 25K or more, 20 free fractional shares if you deposit less than 25K. I think each is worth $3,000 to $3,000. And if you transfer or contribute to your IRA, you can get a 3.5% bonus match on those contributions to your IRA. Again, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you join Webull with our affiliate link in the description box below, you can also help support our BeachBum trading community and get all of these current offers and promotions. So we greatly appreciate that. I'm using the online browser version of Webull. This is the market screen. We see the distribution of advancers and decliners from Friday. So again, we see many more advancers than decliners, but the percentage of advancement is relatively small and more balanced in the mid-range, very few on the tails. It's interesting, the net inflow, again, even though we saw all the indices were up, this is showing a net outflow towards the end of the day, a steepening towards the very end of the day. So again, there was an initial inflow, both the NASDAQ and the NYSE, and then as the day went on, we got a increasing outflow out of both the markets. So that tells me probably quite a bit of profit taking. Again, topping action in the market. Again, you can see a near-term earnings calendar here in the calendar section in Webull. So again, a great place to see the time and the sequence in which various companies will be reporting earnings, their estimate, etc. So again, a short near-term way to watch their earnings calendar. We look at the best performing industries for the week. See again, renewable energy, solar, Sunrun, SunPower, home building supplies, biotech, again, interest rate sensitive, recovery, uranium, again, very positive for the week. There's, quite a few that we typically watch for uranium, retailers, real estate, again, construction, REITs, utilities, construction, utilities, healthcare, transports, utilities. So again, very positive week in general. Again, your interest rate sensitive uh, industries really got a boost off of that lighter than expected CPI and the speculation that the Fed's going to cut more and sooner. And I think that's potentially overdone, so we might see some corrections in those areas, in my opinion. We look at the ETFs, again, up on the Russell, up on small caps, mid caps. So again, that speculation of more rate cuts, up on the Dow, mid caps, up on mid caps, NASDAQ in general, less so. So again, we may continue to see some rotation out of technology, out of the Mag 7 into the Russell, possibly biotech, utilities, again, your interest rate sensitive sectors. Again, we saw a recovery somewhat in the yen, euro, short on the VIX, and up on the Russell, small caps. Commodities, healthcare, industrials, financials, utilities, not so much communication services, energy, real estate. So, most things positive, basic materials. That's several lithiums, copper. So possibly recovery in those areas. Some other commodities, UNG, natural gas, zero coupons. Okay, so let's also go look at the futures in FinBiz. Just a quick reminder, you can now also trade futures in Webull, and I have a link to their futures offering in our Discord, and you can access that in detail via the link in our notes. So again, we see that pop up in the Dow, new all-time high. S&P just retreated a little bit, pretty flat, but again, steady uptrend. Same thing with the NASDAQ, gave back a little bit. Again, I think that's mostly profit taking the Mag 7. So again, we'll see if that rotation, out of technology into small caps continues. You see that strong surge in the Russell, big pop on the light CPI data. Again, speculation of more and sooner cuts. Nikkei was running up with yen weakness. It rolled over. We saw a bounce back in the yen. We'll see that. Although we'll talk about the ETFs in a minute, different ways to trade some of these themes. A little bounce in euro, a little bounce in the DAX. Again, not a whole lot of volatility. VIX, still in the mid-12s. Oil, again, kind of tested 85, near 85, came down, not quite to 80, bounced back up, so kind of stuck in the mid-80s right now. Again, natural gas retreated down below 3, broke down below 250, so it looks like it's got some support in the low 2s, 230 or so. So we'll see if it continues to break down or, again, goes back to retest 250. Again, we see that huge surge in gold. Again, I think that was on the CPI data, maybe the DXY weakening. See that big pop up, slight retracement, dip back down, didn't quite test 2400, bounce back up. So we'll see if that holds or if it's going to correct. Again, I want to talk about several of the ETFs for short-term trading. That's volatility. You can see pretty reliably when we get a big surge in gold or silver, we tend to get a correction. Now, whether that holds, like here we have that long wick, or if it bounces back up, these big surges tend to be followed by correction or reversal. And I think there's, for your short-term traders, day traders, scalpers, etc., I think there's plenty of opportunity to make some good money, both on the surge up, and if you catch that reversal and short back down. Again, these are very short-term trades because we see it has a tendency then to trend, in the other direction. So I hope that helps. Soybeans correct some. Corn, maybe I found a bottom. Looks like it got a bounce. Wheat looks like it's coming down, so that's one we've traded profitably before. We'll see if it comes down near the recent bottom. Maybe take advantage of that one. Last week we talked about opportunities, how you can make money trading corn. Looking for cotton, for an ETF to play cotton. Cotton looks like it's at a pretty long-term support level, so I could not find an ETF anywhere that to long cotton. So if you're a futures trader, you might want to look at opportunities long cotton. Again, that might be an opportunity there, again, if you trade futures. Again, there's no ETF I could find to trade cotton, either as a sole commodity or as a component like a DBA. I looked at all the commodity ETFs, couldn't find one that had a significant exposure to cotton. Coffee up a bit, and we saw the bond yields decrease significantly, so bond prices back up. We'll see if the 30 can break that recent top or if it corrects again. 10 has broken out, so might get short-term corrections in all of these. 2's exuberant, again, speculation of cuts. So again, I wouldn't be surprised to see a correction, and then we'll see if that long-term trend up continues. Okay, we saw DXY broke down below 104, so foreign currencies, also the British election, gave a pop to the pound, euro. Again, we saw a rebound. Maybe the yen finally found a bottom. We'll see. And it's unclear whether that's just the weakness in the DXY and the dollar, or there were rumors of some further intervention by the Bank of Japan. So we'll see if that holds. So far, it hasn't held any of its pops, but we'll see if that continues. So again, I hope that all helps. Welcome, Gerald Pitts. If I didn't see you earlier, thank you for joining us. Glad to see you. Okay, so let me look at our ETF Google Sheet. If anybody in the chat has a particular ETF with a topic, commodity, theme, index, etc., you'd like to look at ETFs for, please throw those up in the chat. We can take a look at those. Just a quick reminder, once we identify a potential opportunity, to long or short a commodity, topic, category, etc., and we jump over to our ETFs Google Sheet, and we can find the ETFs with the risk-reward profile that we like to trade that theme, trade idea, either long or short, using our ETFs Google Sheet. And you can get 24/7 access to our ETF Google Sheet by joining our Patreon at the All Access to VIP level. I don't have any changes, again, to our ETFs Google Sheet this week. I have a whole playlist of videos on how you can use ETFs to make money trading, how you can use our ETFs Google Sheet to help you find the ETFs that you'd like to trade using our ETF Google Sheets. Let me grab a drink and check the chat, and we can look at any that you would like to discuss. Okay, so again, just keeping an eye on the chat. I see some people. We talked about wheat and corn, and there is an ETF to trade corn. It's a little bit higher. This ETF actually has a mixture of a couple futures contracts, so you can see it's not quite as low as the current corn future contract. So and the risk reward isn't that great. We talked about that last week, but I am keeping an eye on that. Again, you can find the wheat ETF. We are keeping an eye on that one. So see if it comes down near that 52-week low. Again, short-term risk reward isn't super exciting, but a longer term, it's a little bit better. Talked about the yen. So if you want to trade that rebound in the yen, YCL long, YCS short, or FXY. Talked about silver and gold. So again, we have several ETFs you can long or short silver and gold. Typically, we use GDXU for long, GDXD for short, or you can use DUST, etc. And you can see the risk reward profiles for those. Silver, AGQ long, ZSL short, or also dividend payers, etc. Solar, can or raise long. There isn't one for shorting. We've got, the pairs. I'm watching MJ a little bit. Seems like it's coming down a bit. Also, if we look at the consumer ones that we recently added, since we're going to talk about the consumer, so we can see right now consumer discretionary was up and consumer staples was up. So based on that CPI data, etc., and both of these are pretty high right now. So again, consumer spending has been strong. We'll see again, does that bode for Christmas in July of 2024, or are we going to see some weakening going forward? MEXX, again, Mexico, we've been watching this one. It's popped up quite a bit. We'll talk about this again tomorrow. I didn't catch that bounce, so if you did catch that bounce and are making profit with MEXX, congratulations on that. Again, we'll take a look at that and see if there's any opportunities left there or if it's already started its swing back up. Talked about natural gas, boil long, cold short, or UNL or UNG long. So again, we saw natural gas coming down some. Oil, again, gush or drip, or UCO long, SCO short. Retail, again, we'll be watching, are we going to get Christmas in July 2024? And we have another number of retail related ETFs. Also, we talked about, possible correction in the Russell. So if you're looking for short the Russell SRTY or RWM. So again, you can pick which one has the risk reward profile you like. And we also have a number of single stock ETFs, both in our main ETF Google Sheet or in the sheet or the research sheet in our ETFs Google Sheet. So if you're looking for a single stock ETF to long or short individual stocks like Tesla, Nvidia, etc., if you can't find them in the main sheet, you can possibly find them in the research sheet as well. Again, treasuries, different durations, etc. TMF is long on price. TBT is short for the 20-year plus, and then different time frames. Uranium. So again, I'll try to keep an eye on the chat and see if anyone else has a particular ETF you want to take a look at. I'll leave the sheet up, and we can always take a look at any other topics that you'd like to look at. Let me grab another quick drink and let's talk about our theme for this week, Christmas in July of 2024. Okay, again, our theme for this week is Christmas in July 2024. And the question is, are we going to have Christmas in July this year, or is the consumer weakening? Will we not get quite as good of a Christmas in July this year? Part of the basis for this theme is Amazon Prime Day is this week. So Tuesday and Wednesday is Amazon Prime Day. In my humble opinion, I think the results coming out of that may give us a good indicator as to whether or not we're going to have Christmas in July 2024. So listen to their results from Amazon Prime Day. Do they get record sales, or is it a little weaker this year? Obviously, that would negatively impact the Amazon stock if that's a little weaker, but it will also propagate to other, particularly online retailers as well, if it's showing some weakness in the consumer. So again, the question is, is the consumer going to continue to spend as they have, or are they going to reduce spending? Again, we see, high inflation. We hear from restaurants, etc., that the consumer is getting a little more value conscious, a little more price conscious. They're, kind of fed up with increasing prices and inflation. So are they going to reduce their spending, or are they going to defer their spending, possibly waiting for, future better discounts or deals? So if they think, we'll get better deals with a weakening economy going forward into the fall or winter, are they going to defer that spending and wait for discounts and better deals going forward before they actually spend? Again, my humble opinion, you're not going to see actually reduced prices. I think retailers will just offer discounts, better deals, combo type deals like McDonald's, etc., is offering to try to attract more value conscious consumers. Also related to travel, we heard that Delta reduced their guidance for Q3. So even though we had record airport numbers for the July 4th weekend, Delta came out, announced their earnings. Their earnings were pretty good, but they reduced guidance for Q3. They kept their full year guidance. So that says, it sounds like they believe that spending is going to get deferred, probably slow down in the summer for air travel, but possibly into the holidays pick back up as they held full year guidance. So we want to listen to, the results from Amazon Prime Day, also as the retailers and travel-related companies start reporting earnings. Again, we want to listen for what do they think in terms of, Christmas in July. Again, their earnings are going to be from the previous quarter, so it's not so much how they did in Q2 as to what's their guidance for Q3. We're going to see a further slowdown in retail, in travel, etc., over the summer. Also, what does that bode for back to school season, for the holidays? See people talking about, the whether you're buying gifts for kids in Amazon now or you're going to wait. Think you'll get a better deal in the fall. So again, I'd love to hear your opinions. What do you think? Do you think consumers are going to continue to spend? Do you think we're going to get a record Amazon Prime Day or disappointment? Are consumers going to reduce spending? Are they going to defer spending till later in the year? And what does that bode for the economy? So again, we want to listen to this guidance, look at the numbers, and then take advantage of trading opportunities accordingly. If we hear disappointing numbers from Amazon, again, your other online retailers and possibly retailers in general may get hit on that type of news. Also, this Delta guidance, we'll probably see, well, we did see the other airlines negatively impacted by that as well. So will that propagate to other travel-related companies as well? So again, love to hear your feedback in the comments to this video in our Discord. And we'd love to have you join our Discord, participate, share your thoughts, trade ideas, etc. in our free Discord. We also had a similar discussion, last year about Christmas in July, so you can hear that discussion as well in our weekly trading game plan from last year. Also, I thought it was kind of interesting. Last year we talked about the Warren Buffett adage, be fearful when others are greedy. And again, last July we had a pretty topping market, pretty high market, and it looks like we're there again this July. So again, same adage, be fearful when others are greedy, protect your profits. Again, we talked about the seasonality, so you can see the trends for July and also going into the summer. And we talked that typically, after July we have a drop off. So again, we might have a good July. That would be historically expected. But then historically we see a drop off going into the August and into the fall. So again, protect your profits, be fearful when others are greedy, take your profits appropriately, etc. So I hope that all helps. So Ellen Kranz is asking BBY. I assume that's Bed Bath & Beyond. Let me take a quick look. Got a few minutes. Normally we look at individual stocks on Best Buy. Okay. So normally we look at individual stocks on Sundays when we're picking our best swing trading stocks to watch, and we will come back and we'll talk again tomorrow about how can we take all these trade ideas, trade strategies, and apply them to our top swing trading stocks to watch, etc. Here's Best Buy. So Alan was asking about that. Their dividend payer. Looks like they've been, they got a nice boost off of earnings. I also know they're projecting a positive impact from AI PCs. Again, just my humble opinion. I think that's overblown. My humble opinion, I don't think the consumer is going to go out and buy AI PCs right away, especially with the economy slowing a little bit. They do pay a small dividend. It is optionable. Floats relatively stable. They've got a significant debt. Don't particularly like that. And this is, a brick and mortar retailer primarily. And they popped up to their long-term moving average, got rejected, bounced back down to near their shorter-term moving average, bounced back up. So it looks like it might be range-bound slightly. So risk-reward currently looks pretty balanced. PE's not too bad at 15. Looks like they've had a bunch of insider sales recently. So that's kind of a negative. Net income's increasing, so it dropped off and then increasing. So it did drop off this most recent quarter, so that's somewhat negative. So again, if we don't get Christmas in July 2024, if the consumer's starting to reduce or defer spending, that would negatively impact Best Buy, as they are, again, a brick and mortar retailer. They do have some services, Geek Squad, etc. So again, I would listen to their earnings, listen to their guidance going forward. Right now may not be their best time. Possibly going into the holidays may be better, again, if we don't get Christmas in July and the consumer defers some of their spending to the holidays. This quarter might not be the best for Best Buy. Again, my opinion. If anybody else has further input into Best Buy, what do you think of the company? What do you think of the stock? How do you think they will be impacted by Christmas in July, slowing the economy, slowing consumer, etc.? And then again, going into the holidays, might they pick back up? So I hope that all helps. And if anyone else has other stocks you'd like to look at tomorrow, please put them in the comments to this video. Please put them in our Discord. Appreciate it if you tag us in our Discord. We're BeachBum Trading, all lowercase, no special characters, numbers, etc. Anyone else is an imposter, and we will not contact you or direct message you without letting you know in advance. So anyone, again, that does so is an imposter, but please let us know other stocks you'd like to take a look at. Also, we'd love to hear your recommendations for improvement for our weekly trading game plans, any of our tools or resources, our community, etc. What all can we do to help add more value for all of our BeachBum traders? Again, we hope you like this content. We'd greatly appreciate it if you'd smash the like button. Help us try to get the YouTube algorithm to give us some love someday and share our content with other traders around the world. We really need your help to directly share our content, our social media postings, etc., with your fellow traders. So again, we can continue to build our BeachBum trading community. You can also contact us via any of our social media sites. If you have questions, would like us to look at a stock, etc., and you can find the links to all of our social media sites as well as our Discord, etc., on our homepage, beachbumtrading.com, bum without the U. So again, greatly appreciated if you'd like and share our content. Hopefully you're already subscribed to our BeachBum Trading channel, and we hope to also see you in our Discord where we can continue these discussions 24/7. We hope you'll come back tomorrow, 10 a.m. on Sundays, for part 2 of our weekly trading game plans, where we'll take all this market analysis, all these trade ideas, trade strategies, and select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. And we'll also talk about how we can use dividend payers and several option strategies to generate additional income while we wait for our top swing trading stocks to set up. So again, we hope to see you all again tomorrow for part 2. Thank you again to everyone that participated in the chat, watching after the fact. Thank you again, and have a great day.